Alrighty. Okay. Good evening, everyone. Thank you for taking out the time to sit with us. I know the market's still open. Some of you might still be trading. But yeah, thank you for coming out. If you have any questions, feel free to throw them in the chat, or even better, try to, have a conversation. This is pretty informal for the most part. It's geared towards beginners, but we can go over, a few different things if need be. Charts we usually leave for the class during the midweek, or if you're looking at SPY or everything, we're gonna like Smoove does a great session on Sunday for it. So we try to reserve those for it. People who are new to trading, this is more geared towards them. And then, if you're more towards option trading, then we have Joyrider over here who is, a much better resource than, almost any of us over here. He's been doing this way longer than us and is way better. Just as a disclaimer, nothing we say over here or we tell over here is financial advice. We don't have the qualifications or we're not allowed to do that. So, this is just all in the name of education. If that helps you, that is awesome. I'll send you my Venmo account. You can send me some money. But otherwise,
strike that from the record.
Yeah, but yeah, we just we'll take questions and we'll go from there. Does anybody have any questions to start with?
I think you tabbed out of Webull there. I'll read the messages if something pops up, all right?
Oh, sure, okay.
Yeah, so that way you don't close the stream.
Yeah. So one thing that I want to discuss the last time that we were talking about was support, resistance, and EMAs, right? It's one of those things that, people, we see are recurrent. People asking us to how we draw them, how we know where to take profits, how to know where support is, how to know that you're faking out, how do you know that, where to stop basically. So I thought that we could go over a chart that I did not trade today at all, and take a peek at it. Right, I did not touch this at all. It's a big shooting one, was 265%, stuff that everybody likes. If you did not see this candle, would you want to touch this stock? Can anybody answer me that? If you did not see this massive, beautiful green candle shooting up,
Probably not.
probably not, right? Like, so that's the right answer, right? Just don't touch. Like when in doubt, zoom out, take a look at it. If something's going down, there's no use of taking risk, right? So when you are evaluating a stock, just in general, like if it pops, for example, like if it pops like 5% or 10%, and somebody mentioned it to you, just zoom out, take a look at it. I know it's easy when you go on the 1 minute and you see this massive candle, like when you see that 5%, even if you would have looked at it over here, like if you hadn't seen anything, and you would have seen it gone from zero point 0.5 to maybe 0.6, which is a 20% gain, right? If there was no news or nothing else and you would have not seen this, just zoom out a little bit out, right? Like either go on the 1 hourly, zoom out back, or go to the daily and just look at it. How does the stock look? If it doesn't look great, try not to touch it too much if you're not too experienced, right? If you're experienced, then you should probably get out of this class. No, I'm just joking. But just try not to risk your money on something which is on an obvious downtrend. If you see something that has gone up for a while, like if it's been going on for the last 2 hours, it's going up nice and steady, then, maybe you could take a look at it and maybe you can make like, scalp a little bit of it without having too much of your money being risked at it and go from there. Support and resistance, in essence, are places where prices stop, right? Support is something where your price bounces off, like at the bottom, where it's supported, like it doesn't let it fall more. And resistance is, in essence, where it stops moving up, right? You get you're like a glass ceiling or whatever you want to call it. It's just, in essence, it's those. Why does it happen? It basically happens because of what a fair market value of something should be in terms of big money. You can't say that GlaxoSmithKline is supposed to be $1, right? That's not the worth of that company, right? Like if they have 1,000 stocks out, and if it's $1, that's not a fair assessment for a $1 billion company. So you try to value a company based on what it is, and that's what the stock price reflects, and that's where it should be, right? It's a little difficult to decide the exact value when something's moving really fast, but in general, it gives you an idea of where something should be. With these penny stocks, which we trade pretty, nicely every day, or pretty frequently every day, the general trend that you see them going down is because they're not established. They're not like Amazon and Google. They're not sitting with millions of dollars and billions of dollars of cash. They have to raise money. Every time they raise money, they offer shares to somebody else. That means the company is usually diluted. That means the value of the company goes down. More shares, same value as it was, yesterday. Like today, they decided to offer more shares. That's what happens when the company gets diluted. So that's why you generally see these companies slowly, slowly, slowly taking down, like nice drops and everything. And occasionally you'll see an inverse of this where the price just falls off a cliff, like 30%, 40%, and those are usually, for biotech at least, are those where you've failed. The whole shebang, like the whole spiel that I gave you just now, is to tell you that you know the support and resistance are based off where the stock is traded, and it's based off volume, right? Like where is the stock most traded, or where it comes to support. And if you look at it, what is traded more, penny stocks or like a big ETF like SPY, for example? Which one is traded more? And I'm sure everybody's saying, um, SPY, right? So when something is traded more, it has more volume. That means you have a lot more areas that you can look at where it's being supported. When something is traded less, you have less places to look on. So you try to zoom out, or you try to condense those points together. And the easiest place for penny stocks to condense them together is on a daily time frame. That's where you get the best idea pretty much all around. You can what it misses out a little bit is when you go from a daily to a 4 hour, it will help you show all of these spikes in the middle, which happen in after hours. You see how after hours started, there was a spike here. After hours started, there was a spike here. There was a spike here. These big spikes you will miss on the daily. So once you're done drawing a chart on a penny stock, you can absolutely go to a 4 hourly and see if you can find a place where it commonly reflects. That is how I was taught to do it, by a very legendary investor, trader that I know of. He's I don't know whether he's here or he's making money right now. But
Excuse me, are you showing a chart? Because I can't see it.
oh, okay. Give me a second.
It sounded like you were referencing one, and I'm like poking around trying to figure out how to view it.
Oh, you gotta watch his stream. Your stream is still up. You gotta make sure you tap into his stream
Yeah.
on IntheZone stream. He's currently showing what is it,
BOXL.
BOXL.
Are you on your phone or on a computer? All right. I hope you're able to figure it out. If not, just let us know on the chat. We'll help you figure it out. Does everybody understand it to this point? I know I went very like nitty gritty, but it took me a lot of time to understand why we do it the way we do it. Does that make sense?
Yes, most definitely. If you don't mind, I just want to add one
Yeah.
thing to to your support and resistances. Interesting way to put it, which kind of helped me understand how support and resistance works. It's kind of what in the zone said as far as the value of the stock, where trading volume considers the value and the worth of the stock is, right. Um, with support and resistances, you can consider them both rejections, right? So in your head, you're thinking a price rejection is going to be a resistance, right? But your support is just as much as a rejection as a resistance, because essentially what's happening is price is rejecting to go lower, right? So a lot of the times when people consider a support or where do I find the support, a lot of times you'll look for some full body candles. I've seen things where people are putting their lines in the middle of multiple candles. Yes, there is probably a high volume note there, but your true support lies where price is either wicking off of or bouncing off of, right? It's not in the middle of the value range. It's essentially a level on the chart where price is rejecting to go lower, and the same for anything above the price, right? It's rejecting the price. Buyers and sellers are fighting, and sellers won't allow the price to go higher. Conversely, buyers are buying, and they won't allow the price to go any lower. Just a little tidbit on how to find the support and resistances instead of looking at just where candles are stacking, which is good because there's obviously some volume there, but it's also significant to look where price is rejecting off of, where you're seeing multiple stacking bounces off of a specific level. But yeah,
Yeah, and
I'll
and
pass
that's
it back to you.
yeah, no, no, that's great, Joel. I was about to add to this that you'll see different people drawing support and resistance of different level in different ways, and that's basically, I try to draw it off bodies of candles, right? I'm gonna expand this out, and I'll show you that I generally try to capture bodies because that's where most of the volume is done, right? But on the converse side, Moen, when he draws it, for example, he usually uses wicks, and there's a good reason for it because he likes to short. When he shorts, he's trying to see where the price is getting rejected off, exactly like Smooth said, right? So I try to find my levels. There's a little bit of a different way of doing it, and there might be like a little bit of a different result with it as well. But neither one of them is wrong. You have to, at the end of the day, when you move a little bit forward in your trading, you'll realize what you're trying to aim and what you're trying to get out of your trading, and you'll kind of adjust your style a little bit based on it. I don't want to go into too much detail of that because it's a whole that's like geeking out, and we can keep going on it for an hour or 2 hours. Um, but this is one of those things that try to capture like the basis of it, and then we can kind of move off of it, and in a different class we'll do the geeky stuff if anybody wants. Um, so can everybody see my chart now for BOXL?
Yes,
Okay. So this was like a huge
and
mover, right? Like you can see that price consolidates at a few different places. One, two, like somewhere over here, three, four, somewhere over here, something like this, right? So what I basically do, I move from right to left because right is the most recent, and that's the most that I generally care about. I try to stay when I'm trying to chart a penny stock. I try to stay within a reasonable expectation, I guess. Let me put it this way: if you're charting something at point 0.6, you can pretty much go to maybe 300%, 200%, 1.2. Try not to, zoom out and think that this will ever go to $6, because most likely that won't happen in 99% of the things you trade. If it ever does, then you can obviously go back and draw it. But try to concentrate on, like 100, 200%, and you'll be able to get most of what you're trying to do. One thing that I always tell everyone is your job as a trader is to catch a part of the move. It could be if you got in early, that's great. If you got in the middle, that's okay. Try not to catch the end. Like if something's run 200%, try not to catch the 200 to 240% or 200 to 300% because your risk to reward ratio falls down considerably. So try to catch a part of the move. Nobody in the world catches the whole move. If somebody tells you that, they are either lying to you or they are very, very irresponsible with their position. You will learn that yourself very fast. So back to support and resistance. You have a nice chart drawn in front of you, and all I do is this is my system of doing it. I just mark the bottoms. I'm just gonna go mark the bottom one, mark the bottom over here where it consolidated two, mark the bottom maybe over here, which is where most of the candles were three, and you can just I'm just eyeballing it. I'm not even like going really. This is when you're in the heat of the moment and you're doing it, right? I'm just eyeballing it. I'm just marking one bottom, two bottom. You can probably put one over here, which is the third bottom, fourth, fifth. Does everybody feel that is relatively easy?
Yes.
Okay. So then we move to the tops. You'll suddenly realize that when I did this bottom and this bottom, it kind of identified the top of this. When I did this bottom, it identified the top of that. When I did this bottom, it identified the top over here. When I did this bottom, it identified the top of this. Was that magical? Wasn't that absolutely magical? Um, and then, you
We're
can,
consolidating though from September
yeah.
on.
I mean, I won't say, there's a big range, right? If you go from November 2023 to now, like, it goes down, goes into a channel and then goes down and goes to a channel and then goes down, goes to a channel. Nothing goes straight down, right? Like, even when you look at on a small time frame, even on a daily time frame, if you look at SPY or NVIDIA or even a general stock, nothing goes up like bam in one go. Everything moves up, consolidates a little bit. People feel there's a little bit more room, and it's going to move up. Or conversely, something's moving down, it moves down, consolidates a little bit, and then moves down again, and then consolidates a little bit, and then moves down again. So we always try to keep that in mind, how it's going. But the general trend was going down for this. So all I'm doing right now is identifying the bottoms and I'm just marking it, right? Like if it aligns well, that's also aligned over here, aligned over here, the top of it aligned over here. And for me, like if I was looking at it for the first time from zero point 0.3, I would have probably stopped like at 1. But since I know that there's a candle here, I was like, sure, I'll draw it, right? Does anybody have a problem with doing this? Does this make sense now a little bit? I know there's a lot of this is just practice, right? My eye is now a little bit better. Moin does this 5 times faster than me because he's more used to it than me. I'll miss out a level over here, for example. I may miss the one over here. But it's the more you do it, the faster you get at doing it. Does this make sense? Why I did where I placed those lines?
Yes.
Okay, awesome.
Sure.
So now
You had a question in the chat there. I answered it, but it'd probably be good hearing your input as well.
Sure. Question was, uh, for bigger companies, we should do support and resistance on the 4-hour chart, and for the penny stock support and on the one. No, so the other way around, right? Maybe like that's for the things that have more volume overall, like in a day, or over time, you can actually go down to the smaller time frames and look at it because there's just so much data that you can look off of. Like SPY trades so much that depending on how you're trying to trade it, you can go back down to 30 minutes. You can go down to an hourly. You can go to 4 hourly. You can go to a daily if you're like just looking at investing, right? Because you have so much data to look at that it's very easy to go and examine it closely. With penny stocks, the volume is so much lower that when you go in the day, like within the day's chart and everything, you might see that, in an hour sometimes, when penny stocks are dead, like when they're consolidating like this, you will see that on one day, sometimes, the average volume is, I don't know, 10,000 maybe. Like for something that's a dollar, 10,000, that's only $10,000 worth of moves. SPY does that in, I don't know, like a fraction of a second maybe, if that, maybe less. So you want to the more data you have, the more magnify the chart basically. The less the data, the more broader you'll have to look at it. Does that make sense?
Yes.
Okay, awesome. So right now we've just done it on the daily time frame, right? We'll go to the 4 hourly just to get a nice peek as to if I missed anything. And maybe you can see that there's a spike over here which kind of aligned over here and aligned over here. So what I'll do, I'll maybe go do it and put one over here because this aligned over here, kind of aligned over here, kind of based out over here, and we'll remember this is a 0.66. So what I try to do is I remember these usually, or try to remember these, and I'll go back when I'm going to the 5 minute time frame or the 1 minute time frame, and I'll see how nice that was, or how that supported it, if that makes sense. So now magically, when you go to the 5 minute chart, ooh, how does that look now? In Moin's language, the chart tells you everything. So now, does it make sense how the chart rejected off places and how it's supported off places? Does that add up just a tiny bit more? Yes, no? It does? Okay. I hope it does to somebody. The one thing that I will tell you is that Smooth was saying right now. Look over here. When the price started going up, you know, we get these really nice big candles, right? Like really, there's no wick on this, right? Like really nice big candle, nice still, even though it's going down, it's a nice candle, full body candle, full body candle, full body candle, full body candle. A little bit of rejection over here when we started to sell off, but there was a nice level over here at 1.2. It went down only once, no two candles closing below a level. Went up like a full body candle again, goes up, and this is where you really start to see wicking. 1 wick, 2 wick, 3 wick starts to go down, and then you kind of see that this is where buyers are giving up and sellers are trying to push the price down. And then this is where you start to see that it got rejected off and it came down like all the way from 1.8 all the way down to 1.3, and then it supported off a level again and kind of went back up. And you see when it's going up, full body candles, buyers really wanted everything. Full body candle, buyers wanted everything. Nice candle, a little bit of a wick on top, not horrible, but you start coming back over here and that candle becomes wicky again. So those are things that when you go ahead, you'll realize that, how those candles start to make sense. But I'm trying to bring what Smooth said, which is a really great point, and it got highlighted beautifully how, you can identify by looking at a candle, you can identify how, buyers and sellers are reacting at that point. Does that make sense to everybody? Does that make it a little bit easier?
Yeah, it makes
Yes.
sense.
Okay. The one thing that I will say is then the question becomes, how do you know that, is this a rejection? Like when this starts to happen, is this a rejection and the trend is gonna like there's nothing else more to it? Or whether it's gonna go up, whether it's gonna do another leg, like we go like, oh look at that, it's just flagging, it's gonna go up and it does a nice leg up again. So how do you do that? How do you identify it? And what I'm gonna try and do is we're gonna do EMAs next time. How EMAs can help you identify whether something is retracing, faking you, or retracing, breaking a trend, and if it's going up, whether it's faking out or it's genuine strength in the chart, and that's how we're going up.
I have a question for you.
Sure, yeah, go for it.
Thank you. That line on 1.279,
Yeah.
would it be more accurate if it goes on the bottom of those candles over there? Or would it really matter or not matter?
So I didn't draw this on. So this is a 5 minute chart, right? This started at this morning at 6 o'clock, like 8 o'clock over here, and so this is showing you how price went during the day. I got this level, like this line, when I was on the daily chart, right? When I go back to the daily chart, right? This was the daily chart that we saw. Remember in the beginning of it, I got that 1.2 level, 1.279 from here. Like where the price dropped one day, the price dropped really hard. And you're right, maybe you could just bring it down, depending on how you base your candles, you could maybe bring it down over here, support or resistance. I try to catch, most things, like I caught this one, the wick of this candle, if you can magnify it for you.
I do see it, yeah.
Yeah, right. One,
The
the
next
wick
to
of
it.
this, even though for me, I don't usually use wicks, I use body candles, but it touched over here and it touched over here, so that's what I use, right? And you have to realize, when something is going up and something is going down, you don't have a number where it's going to stop, right? Because there are so many people in the market buying and selling. Price can vary a little bit here and there, right? Like it can go, like if somebody thought that if like a huge investor thought, or an institution thought that the price of this should be around $2, and those are usually calculated, right? That's what most people are, that, or that's what the thought is, that most before the news comes out for penny stocks, most institutions or most big money knows about this, that what's going to happen. So they've already planned how this is going to play out, I guess. And so they have a number in mind, I guess, where this is going to rest, I guess, right?
Yeah.
And if it rests over there, like it can't, because there's not just them playing the game. Like everybody, all of us are playing the game as well, right? So it can go a little bit up, a little bit down, but it usually supports around a nice area. You know, like if you're trying to push it down, like if you're trying to short it, for example, they're gonna try pushing it up. Like if they want this level to be supported, you'll see some of it go down, but most of it is pushed back up. Like if you saw this over here, sell, 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 and all of a sudden there's a candle that's buy, a little bit of an indecisive candle, but buy, pretty much kept on going up, right? So, these lines are not set in stones. These are just lines that are taken from what the trend was before. So when you see it on a shorter time frame, like when you see it playing out, it can go a little bit up, a little bit down. That's why we usually try not to be hasty about exiting and entering a position. We usually try to make it, guide let our EMAs guide us, because EMAs, so let's put it this way. Most of the data that we have is retrospect, right? Or all the data that we have is retrospect. Like whatever you're looking at, like when this is going up, like if you were watching this at 10 o'clock in the morning, let me put this as 10 o'clock in the morning right here, right? Like somewhere over here, 10 o'clock in the morning, right? If you were watching this and you had nothing on the chart to the right, like if all of this was non-existent, all you can see is what is over here and what has already happened before. So you're using just all those points as a guide as to what it might do in the future. You look at how right now the volume was, for example, right? If the volume is going up or if the volume is going down, right? If more people are interested in it, that means, the volume should go up. Now, whether they're interested to sell it or buy it is a different thing, but that volume, you'll see it starts to increase, right? How the volume kept on during the whole day, the volume just kept on, like there are spikes where it goes down, where it's maybe consolidating a little bit, but you see that the volume just kept on going up, up, up. And after the time that you see it starts to fall down, when the interest starts to fade, that's when the price really started to go down and stagnate again. And then suddenly at 2 o'clock or 12 o'clock, sorry, in the afternoon, somebody really wanted to buy stuff, like, somebody was really interested in it. And that's where your price started going up again, and more people got interested. And, this is how more buyers came into it, and, you saw the price go up. So all the data points that we use are all retrospective, right? It is our job to see how each one of those points can help us in making that decision. So that's why I said, next time what we'll do is we'll try and see, like, when it went below this 1.29 level, what would have prevented me from selling it, or, somebody else from selling it, or whatever or what would have caused me to sell it over here and not over here, or you to sell it over here and not, over here. Like, why didn't you sell it over here and why you sold it over here? We can talk all of those about those, and there's a chart like this every day, I promise. Even if I don't trade it, I just go back and draw it, and surprisingly enough, you get to learn a lot out of all of these. Does that make sense?
Yes, it does. I appreciate it.
Okay.
IntheZone, you have another question in the chat. It was, do you prefer using the EMA or the SMA when doing your penny stocks, and why? Or is it just a personal preference?
So I'm really, like, I got taught on penny stocks, and EMAs have worked out so nicely for me that I have not bothered using SMAs. Unfortunately, I'm an idiot. Somebody taught me to use EMAs, and they worked out really nicely for me, and I kind of have not experimented with anything else. The good question that I will answer you is why I use the 9, 20, 60, and the 200 EMA. Like, why I use these ones compared to, people using a 13 or a 48 or a, 150, for example. Like, you can set this whatever you like. Like, this doesn't matter. You can set it to...
Hey, how are you going out tonight?
You
You can
are?
set it to whatever you like, 9, 20, 60, 200. You can set it to whatever you like. So, why do you
So if
use
you need to
these
explain
and why am I not using these instead of
medicine,
doing 48, for example? So we'll discuss this next time if that's okay. And the reason why I want to finish early is because Joyrider is here with us, who is way better at options. And I think a lot of people last time as well were really interested in options, and I really wanted him to, share his insights. Also because we weren't able to record last time. So if he can show his how he uses his technique and his insights into, especially for beginners for options, that would be awesome. Do I still have you, Joy Rider?
Yeah, I'm here.
Awesome. Okay, so let me just switch you. Let me just switch my recording, and I think we should be good.
quick question. What is the best configuration? Looks like you've got 9 and 20.
Yeah, I do. I use 9, 20, 60, and 200.
There's no best
Yeah.
or better one. It's really essentially what works for you, for him and his trading style. And if you prefer to follow his footsteps in how he trades each stock, then yeah, I would say stick with the EMAs he had. But as far as the best one, there's no best one. EMAs just work because we all believe it works. So it's truly on your trading style, right, and what you prefer. I know traders who use 113 EMA, right,
Yeah.
140. It could literally be any number you can think of, right? I use the 5 and the 20 solely, and that's the SMA. So it really depends on the trader.
Yeah.
You don't even have to use EMAs. Okay, you can use a simple moving average, SMA, okay, or even a moving average. I mean, they all pretty much serve the same purpose, right? They're here to show you like what's the moving average shows you like what's the average price of the X number of periods that you're putting it out for. So whatever goes with your trading style, go with it.
I don't really have a style yet. I'm just learning how to even set up the charts.
Okay, we all were at that stage somewhere or other. Don't worry. You'll be better than us pretty soon. Okay, just make sure that you listen carefully. That's it. I think we should give the floor to Joyrider.
Yeah. I'm gonna.
Okay.
You can
So
speak
I'm
if
able to
you.
share the screen.
Yes, you are.
Okay, here we go. Let me see
I'm
my
a,
screen. You see my screen? Yeah, you're good. Go ahead. Okay. So my trading style is I trade with volume. Whichever direction is in charge, that's the direction I go. And
My
how
guy.
I find that, and how I'm able to how am I able to see that is by using my volume indicators such as volume analysis, and there's another one I use, the option statistics. Let me see. Multiple screens. Hold on. Right, so I'm gonna bypass that. I just wanted to open up so you can see what it looks like. If you have Weeble, this is on Weeble. So if you have Weeble, this would you will look just like this. Or other way set up, cause these tabs right here, you can move them around just like you will move you will move screens back and forth. So how I find volume? Trying to get this other screen, my main screen. Give me a second. I need to find it. Okay. You guys see my screen now?
Yes.
Okay. So the option statistics, this is what it looks like. This tells you where put and call orders are placed. And this doesn't show orders that have been executed, being filled. So
This is not going to show you. This is showing you where they put their limit buys and limit sells. From here, I will go over to my volume analysis and see which direction the volume starts to trend. And this is where, in this case, if this starts to become more dominant, that's always taking a position. And right here, one more tool I want to show you guys. I'm not going to see it right now. The monitor just closed. But I use my level 2, and like I mentioned in the Discord many times about level 2. This is where I can see where orders are being placed. Then I'll go over to my timing cells and see orders that have been executed, or you can just say filled. And depending on which direction it starts to go, that's where I'll be more biased, and then I'll look for an entry position. Take my entry into play. So how I got this level right here, I'm gonna go slowly and show you. I'll first go on my daily chart, and this is how I get these shaded areas. And what I'm looking for is 3 things. I'm looking to identify accumulation, markup, distribution, and then the inverse, mark down, accumulation, and then start the process over again. I don't remember, did I share with everyone a picture I shared 2 days ago about distribution, accumulation, and markup, markdowns?
No.
No? Oh, okay. I'll look for it and share it either today or first thing tomorrow morning. It's just shown how to identify when price breaks out of a particular pattern. Accumulation, you want to see price break out and retest, and then this is how I get it. So right here, if you see this right here is accumulation. But price keep respecting this level right here, 589.38, and it keeps doing it here. Every time price comes around here, get rejected before it breaks to the upside. And down here on the inverse, price cannot continue or price cannot close below that the 582.75 level. So that's this. So right here is accumulation. And just a lot of buying and selling before the big move happens. And right here, you identify this trend right here. Let me go. Here, this will consider a markup. There's in charge. And then here's where they start to sell. That's what I call distribution, because there's a lot of buying and selling, just distribution, giving in back and forth transaction, but no one wants to go higher, no one wants to go lower. Excuse me. To go lower at this point right here. So this is what we call distribution. And once price is able to confirm below 678, comes back right back into accumulation. And this is where accumulation happens again before price breaks. And every time price comes out here, it accumulates and break either upside or downside, but it hasn't done that in a while. So price is still bouncing. It's just going to keep ranging from here to here. So you're going to go from 579.38 to 678, and you're just going to keep doing it until it's able to break to the upside or to the downside, and that's where we create another liquidity zone. There's going to be a lot of transaction going up and down around this area down here, and also a gap once a gap is filled, it's either going to reverse to the upside after it grabs some liquidity, or to the downside where there's no more, where they're seeking more liquidity. So I don't trade, as you see on my chart, I do not trade with indicators. Those to me they make too much noise. They interrupt. It's distracting. I don't trade because all I do is just look at volume. I use the 4 tools that I showed and the 6 tools that I show you guys. If you guys can imagine it, if you watch The Matrix and you see how they look at things in a complex maze way, that's how I see volume. And the only thing I'm trying to do is identify who's in charge. Bidders or ask. Bid or ask. And that's how it enters place. So I don't have a particular indicator to tell me when to go in or when to get out. I just look at volume, and that's how I scale out of my position. Have I lost you guys?
I got a quick question.
Yeah.
I hear you saying accumulation and distribution, but are you talking about like, is that also a resistance and a support?
Okay, so you ever seen a car auction? Where the people buying and selling, and they got the auctioneer saying the price?
Yeah.
Well, okay, think of it like that. So someone comes in with their vehicle and say, "Hey, I'm selling this vehicle for $100," and then they start at 100. No one bids. When they go all the way to 90, that's when bidding starts happening. And then the asker, which is the seller, start increasing the price because he wants to get the bank or bang for his buck, or in this case for his vehicle, he wants to get as much as possible. And that is how options work. Options usually don't care about if the stock price goes up or down. Option is its own entity. If you want to think about it, it's just connected to the stock market. It's regulated, it has its own regulations and regulated body where that regulate the options clearinghouses. So that is how volume is created, and that's how I trade on that.
But how'd you know where to put those white boxes at?
White boxes, because okay, at the bottom here, this is the demand zone, correct?
Mm-hmm.
So inside the demand zone, there's distribution, buying and selling, buying and selling. No one wants to go higher, no one wants to go lower, and that is what you call not distribution. This is accumulation. This is what you call accumulation. Sorry, here's accumulation where people are doing a lot of buying and selling, buying and selling, buying and selling because there's a lot of liquidity.
All right, so I guess my question would be, did you chart that out before this happened, or is this just like after you showing us where everything was?
Charted these this morning, but this right here was already charted. This was already charted.
Okay.
And then I put the boxes in this morning, and that is how. And once you understand accumulation, markup, distribution, markdown, once you understand that way of trading, you start to see the market differently. Because whatever accumulation price has to go up or down. And as a trader, our duty is to find which direction. Once you're on the right side of the trade, that's where you start making your greens.
Okay, thank you.
No problem. More questions? Seems hard, but it's not. The market only respects two things: price action and volume. Nothing else. It doesn't give a hell about our chart. It doesn't care about how many lines you draw on your chart. Nope. It's price action and volume. And once you understand how that works, and you can time to be on the right side of the trade, that's where you become profitable.
I have another question.
Yeah.
So as far as expiration dates, how do you choose your expiration?
Choose my expiration based on volume and open interest. As you see here for a SPY, I would do. I would look at volume. I want to see a lot of volume. For example, here, give you a better example.
Probably look toward the end of the week expiry, give you a nice little balance.
Oh, yeah. Oh, this is today. Yeah, there we go. For example, say this today was the 7th, and I'm looking to do a call. What I want to see is I want to see a lot of volume, and I want to see quite a few open interest, I mean people placing orders here. And as you're looking at it, this number changes. You can see it in real time. It changes in real time. And if you're doing a call, and you see this number starts to rise, and this number here going up equally, the right side of the trade. That is how I enter my plays based on volume and open interest, and somewhat implied volume, but I don't rely too much on that. This is on days where the market is moving really slow, and that's how I can tell, hey, this might be a good strike price going at. That answers your question?
Well, I was asking about the expiration date. Cause I see some people go like 3 weeks out, some go like a week
Oh,
out.
okay. So for me, I'll go 2 days out. 2 days out expiration. Uh, since the way my strategy is that my setup is oftentimes I will sit in distribution or accumulation for a while. So I want to get a long enough contract that I'm not too much of my premiums not being eaten up while I'm sitting and waiting for the breakout. That makes sense.
Yeah, that makes sense.
But
Thank
if
you.
you're gonna do a swing and hold overnight and stuff like that, for example, if you're gonna do that with SPY, one, it's gonna get really expensive, and two, it's not guaranteed. SPY's been doing some crazy swings in the last 3 or 4 months. I would not risk swinging SPY more than overnight if you really have to. If you're really confident in your setup.
Yeah, I
And
think
Okay.
as a general rule, Ali, as well, if you look at the options flow here, you'll see that there's like a delta there. So your delta, you can think of it as somewhat of like a quote quote percent chance of profit, right? So the higher the delta, um, the more safer the contract is, right? So if anytime you're looking to jump into a trade, aside from the open interest, which is highly important because you want to make sure that other people feel the same way, and you're not just the sole man in there, right? You want volume to follow suit, but
Mhm.
you really want to make sure that you have a decent amount of delta because anything under point 0.5, point 0.4, you run the risk of not being in the money even if the price gets to your level by the time it expires, you'll be down 40-50% of your contract, right? But if you bought something that's point 0.8 delta, by the time it gets to your price target, if it's the very last day right before it expires, you still might be up $5 as opposed to being down 30-40% or whatever the case is, right? So generally, you just want to go for higher delta. It gives you more room for price to fluctuate and move around. That's why he will buy something 2 days out because it gives it time for price to settle, for volume to find supports and look for resistances as well.
Okay.
Correct.
So,
I'm
so
sorry,
with 2 days
jumping
out,
I'm gonna dumb it down for like the way I understand it and the way it was explained to me. Your options, what you buy, is based on how much risk you want to take, right? How much, because the closer you get your expiration date, the more risk it carries because the more it moves depending on the direction. Like if you ever get caught in the opposite direction, one. Two, you want to um, people try to simplify, although you should know your Greeks really well, what each one of these things mean. Like, Smooth was just explaining what delta was. Even though you should understand it really well, most people would try to minimize the effect of the Greeks as much as possible. In very simple language, that's what Smooth and Joyride was trying to tell you as well. The reason why they take a day or two out is because they want to trade only for that day, but they minimize the effect of those Greeks on the price of the contract while it's just sitting there. If you want to, really minimize it, you could go a week out. You could sit there for 3 hours, and if the price hasn't moved a huge amount, you won't burn any of your, um, you know, money away. Basically, that's what options inherently do, right? They have theta is inherently burning your money away, right? That's the value of time in that option. So you always want to keep that in mind as to what you want to do, what your experience level is, and what your risk tolerance is as well at the same time.
Okay, I understand now. Thank you.
Okay.
You were briefly mentioning level 2. You use level 2. How do you
Yeah.
use your advantage?
Okay. Right now we can't see, but how I use level two is that level two is just it's simply what it shows traders is where it shows where orders are being placed for a particular price of the stock. Understand? So if buyers think that SPY is gonna go up $1, right?
Right?
About 90 cents, you will see a lot of price movement. You see a lot of weird candle with wicks and stuff like that. But no matter how high the wick goes or how low it goes, can't break support or resistance. So right there, you call that you call that accumulation if price just came down substantially. And then if it goes back up, you call that a mark up, meaning price is going up. And at the top, you will have distribution where there will be a lot of selling, and then over time you notice the selling starts to pick up. It starts to pick up. But in terms of options, it just means a lot of the bids are buying. Bid on the ask is selling their position at almost pennies on the dollar, at a very cheap rate. And that can signify that people are getting out of their position. They're getting out of their position, and that is how the level two shows me. I don't really look at the chart per se to see if price is going up. I can just look at level two, see price going up.
You can basically just think of the example Jared was initially using, the one for the car auction. Okay, like if you see a large number of car sellers, say there's only one model of car being sold, right? Okay, and of particular years. So if you can see like a large number of sellers are trying to sell the same car at a certain place, you can be pretty much sure that if you're also trying to sell your car at that price, your car is not going to get sold most likely. Okay, because or if you're trying to sell it above them, first their sales has to go through, then your sell will go through. Okay,
All right.
so that's the way basically level two gives you a very clear idea of like where the walls might be, both in the bid side as well as the ask side.
So is it? Hello?
Yeah, I'm
Go on,
here.
Ali.
Okay, so is it a possibility that if you want to sell as bid, it might not get filled if it's too many people?
Yep, absolutely.
Yep.
It depends where you are in the queue, bro.
Wow.
Yes.
Okay.
It's first come, first serve. That's
That
how
happened
options are filled.
today.
Again?
Hmm.
I said that happened to me twice today, trying to sell my.
And he just cannot get a buy. Nobody wants it.
No, but
That tells that price is coming down at a fast rate. They skip you. You're out of the queue. You're gonna have to get a new position and come back in the queue.
Yeah,
So I get it happened to me regularly when I first started. It's on a regular. It was just like, man, why can't get into play? Can't get into play. And when I get in, price reversing. It's like, oh, I'm not cool being down 40%. But over time, you learn that, hey, let's read where orders are being placed and what's getting filled and what's not getting filled. And that is how I changed from using candlesticks and indicators to just pure volume.
So should you sell as it's going up and versus like when you hit a resistance?
Yes, if you see there are a lot of if you see sellers are just willing to just sell it for whatever the buyers are asking, that tells you they want to get out of their position. And then oftentimes what you see is that buyers slow down
Okay.
and then buyers will pick back up again. So just if you read level 2, very rare you will miss. And yes, I do take losses.
Okay. So so I seen the way SPY went today. It went up and then went down. Do you catch it on the way up and down?
Oh, no. For example, today with SPY, my position was below this level right here. 598.57. So I got my BRC. I don't know if you guys hear me saying it. Break, retest, confirm. Once I got that with a 5-minute candle, and then right after I have a 2-minute candle close below that price, that's when I go in and I can see and I time it on the level 2 based on price, based on price action at that time. Does that answer your question?
Yeah, a little bit. What I was asking, so you see as it's going up in the morning, did you place a call there, and then once you seen that turning point, you put a put for the on the
No.
downtrend?
No. I
Okay.
try to go for the bigger run.
Okay.
Right. That's why sometimes I will be in the play for an hour, sometimes 2 hours. That's why I buy my contracts out a little bit longer, so theta don't tear it up, or in other words, chipping away at my premium.
Okay.
Same way,
Director, I have a question for you.
more put. Yeah.
Yeah. So on level 2, okay, especially like I'm a penny stock trader, right? So I see it
Yes.
like more often, I guess, than your one. So
Way more.
how do you handle the spoofing?
Uh, Want me to explain what spoofing is to the Discord?
Yeah, I think that, sorry, my question was completely from my mindset. Please go ahead. Yeah.
Spoofing is when someone places a big order, and then when they see, and for example, they see price rising, right? So say they place an order at $1, and price is currently at 30 cents, and then price starts to rise. They will move their order and put it to $1.50 or $1.30. So if you were to looking at that and say, hey, there's going to be a large buy order coming in, price going to keep going, price going to shoot all the way down. And hopefully there are more buyers at the bottom to put it up. And oftentimes that doesn't happen on the bigger runs. Sense?
So is that true also for low buys? I mean, that seems to be what happened to me today. I decided I would try to get in below everyone. So I put my buys well below them. And darned if it didn't come down like that. It just, you think people are looking at that?
Yeah. Yes. That's how institutions trade. They don't trade with indicators and all that. Because for one, they can control the market. They control the market. They just use us for liquidity. Because if they have so much money, if they were to dump all that in the market, it will crash the stock market. So they trade in increments. They control volume, and that's where I want to see it get placed. And they see other retail traders as us placing our orders as well.
Yeah, in the future we'll do a class where I learned this like the hard way, where you realize how institutional investors accumulate stock. Like, how do you see accumulation on penny stocks? It's very,
Mm-hmm.
because it's very difficult to hide that, right? I guess because you can something that's moving 10,000 stocks in a day, they can't just buy $10,000 or $20,000 or $40,000 in a day when something
Exactly.
is not moving. So they have to accumulate as well, right? Like if they expect, like for example, if they expect like a penny stock to have really great results, phase two or phase three, they have to start accumulating their shares as well so that they can make their 100, 200, 300%, whatever they're expecting to make, basically, right? So we'll do a part where we can see how that accumulation. It's a little bit easier to see compared to SPY in my mind, at least, because that's what I look at a little bit more. But that accumulation is very nice to see how those block orders come in, how you know
All right.
that price trends and goes from there. So we'll do one in the future, and I think it will help, like at least I hope some of you.
Maybe then I can provide more of a visual.
Awesome.
I do my best.
It was great. I think it was great. I understood like a lot more stuff.
Yeah. Volume is, it's not difficult, it's tedious.
Yeah.
You have to be able to identify things on the fly. When the numbers are moving, you're keeping track of your head because you have a particular number that you want to see. Like, hey, if I see 10,000 buys, and then right above it, I see they place orders for 30,000 buys. No, I can say, you know what? I'm going to go in here at 15,000. Try to ride it up.
Yeah.
And then hopefully you don't get spoofed because in penny stocks they do that a lot.
Yeah.
Yes,
Alrighty,
it's
man.
notorious. It's notorious for doing it.
Yeah, I think we're gonna try ending it here because it's past 8:30. I wanted to thank everybody for joining in, for taking out the time. I hope you guys learned something. If you guys have any questions, feel free to either put it in the chat, tag one of us, whoever you think is better for it, or if you want to DM, just like if you don't want it on the chat only, just DM it to either Smooth, me, Moen, Joyrider, whoever you think is appropriate. You can message them over there, and we'll try our best to get back to you. The more you ask, the easier it gets to learn, and I think it helps everybody else as well. Sometimes including, like a lot of times including us as well, because we go back and take a look at what we do, and it really helps me out when I'm answering those questions. So yeah, feel free to do that, and hopefully we'll see you in the next class and in the forum. Have a good night, guys.
Thank you. And
Thank
thanks,
you.
Jordan. That was very insightful. Thank you again.
Appreciate it.
All right. Y'all welcome. Thanks.